So stable currencies. So how did they actually come to exist in a crypto world? It seems that crypto traders and crypto community was struggling with volatility of Bitcoin, Ethereum, and other coins, and this is how stable coins were born. When the first ones we all know were Tether and Circle, and then were some interesting new projects coming in, and one of the first ones, I think the first one was of course Theis. So we know how Tether works, we know how Circle works. They were very simply pegged to US dollar. So how did you guys come to an idea of doing DAI and coming up with different collateral and even not even having any fiat in the background?
Yes, so first of all, thank you. I'll just do a quick introduction. My name is Gustav. I've been with the Maker Foundation for about 3 years. So I joined it back when it was a single collateral-backed DAI in 2018. I'm still a contributor to the DAO. And if you kind of want to put, to like why we need something like DAI out there, it's really that we try to capture kind of like the values of what Bitcoin set out to solve, which was this like permissionless, peer-to-peer transfer system, global, and of course for us very important that it has a degree of decentralization. So DAI is really coming from this concept that rather than us relying on centralized authorities and trust mechanisms, we would rather have something that is backed purely on chain, which you can also audit on chain. So Maker is basically a protocol that allows people to lock up different collateral types. Right now we have more than 40 different collateral types in the system. And this has been scaling up quite rapidly. We see this being scaled even more in the future. And that basically allows you to issue DAI directly on chain. So DAI is created on chain, lives completely on chain, and is backed completely on chain. To put it in like a base principle, it's an over-collateralized loan that people takes against their assets. And then basically, allowing people to be the creator of their own money. So DAI really sits as kind of like the bottom layer of a lot of these decentralized protocols, issuing a stable asset which they need to perform the actions. So DAI was also the first DeFi project that launched and kind of like paved the way for things such as Compound to be launched a year after, more or less. But of course now we see kind of like the direction going towards that we don't just want to be a crypto native company, but as Juan mentioned before, we're moving towards things like adoption of real world assets into DeFi, which we recently
more inclusive for institutions.
Just if we look at the DeFi space today, the biggest users are institutions. The single biggest user of Maker is an institution. If we look at a lot of the liquidity protocols and so on, it's also institutions that are the biggest users. We see Aave going towards also with these kind of like sandboxed environments where it's kind of like a permission playground for institutions and KYC users. And of course, like if we want to go and be competitive with what I think a lot of people want in DeFi, which is kind of like create this new paradigm, this completely global alternative where everyone can tap in from all over the world. We also need to be able to actually service people from all over the world in every condition they are. For some, especially in emerging economies, it makes a lot of sense to participate in community decentralized systems, but you also have environments where people want to have kind of like a better UX, some kind of like guarantee of safety that they don't do everything themselves and can send the money to a wrong address, but they just want to participate in all the benefits of DeFi, and they can do these in these like kind of like more controlled environments.
Right. Thank you. So, thanks to you, you are the latest comer or the latest to get gently out of the stealth mode. So you are not pegged to anything. So could you put a few words about the project and also share with us how do you feel about pegging?
Yeah, thank you, Danielle. So first of all, Tichner was created in 2017. We've been in stealth mode because we love the idea of Bitcoin, obviously, but we also saw there was some shortcomings like scalability, stability, governance, and also like closing the loop for end users, making it easy to use basically. So we thought we can solve that, but we didn't really have a fixed solution. So we started to create technology from scratch and also governance models. And we believe we deserve
Just one second. If it's Stas' wife, he's okay, he's with us. So, go ahead.
So we think that we should have an alternative to the current monetary systems that are not backed, that is actually independent and free-floating. But how do we then make it stable? Like Theis and is a great example of trying to solve this. And we have been doing a lot of research and also development into this. Because we still think we need a real decentralized currency that is not backed or pegged to anything, but is like only pegged by the trust of the users. You need a monetary model, a supply model that is basically regulating itself, but it's based on demand intrinsically in the network, so to speak. So we can measure on, for example, velocity of money and so forth, spread of users, adoption, and by that you actually represent value in a monetary system. That's how you link value in an economy to a monetary system. And that's like the main ground. So we are making it decentralized, but not pegging it to anything. It needs to be decentralized.
Thank you. So Stas is a slightly different guest on this panel. He doesn't hold a stablecoin, but he is enabling one. So Stas, a few words on Pontem, first of all.
Sure.
And the second question coming right next to it, why did you decide to enable DM? Go ahead.
So we basically...
Is it working?
Let's test.
It's working.
Yeah. Okay. So we basically been working on the idea for the last 2 to 3 years since the Libra came to the public light, and we basically figured out that while it's amazing innovation and something that being inside the confines of Facebook, and there will be always other regulatory limitations there will be always a need for a slightly less, we call it semi-regulated alternative, which will enable freedom of experimentation while still having a clear public path into full-fledged DM experience. And this is something we've been working on for the last 2.5 years, I would say. So basically, Pontem is, it's a Pontem, it's a Latin bridge. In actual, it's an environment running on public blockchains, like Polkadot in our case, and basically providing you with an experience that you can either experiment and find a product market fit without any limitations in kind of Osama style. If anybody here familiar with Polkadot lingo, and once you did find your your use case, then you can basically start become regulated, compliant, become wise, fast. So to say, is a virtual assets service provider in DM and regulated lingo, and basically get your idea onboarded into their ecosystem. So in actual, we're building kind of incentivized test flight. If anyone here from mobile development kind of this thing. So that's what we've been doing. So basically, we're building fully compliant environment, fully compatible, and we provide this onboarding tools which allow you to easily make sure that whatever you build will not trigger any landmines and will be allow you to become certified and get listed once DM finally launches. That's like the nutshell.
Yeah.
What's multiple about.
So the short one, why DM? Because with DM, based on what we have just described, it goes back a little bit to the Tether model because it's only pegged to US dollars. So how did you choose?
Well, because DM actually will be now backed not by US dollar but the Fed dollar. That's basically about the Fed printing. So DM is right now it's let's call it the most obvious prominent candidate becoming a governmental national CBDC platform. I mean, this is what they've been working on actually for more than a year, and what they announced in the last 3 months. They're basically the top contender to go after US dollar and possibly after the digital euro. There's been a lot of lobbying work being done there, and in actual, at least their position is that once digital dollars launch, there will be no need for Tether, USDC or anything else, and moreover it will be slowly became outphased and outlawed by, okay, I wouldn't say outlawed, but more like out-regulated by the powers to be, so to say. And we even seen an opening shot this week by Yellen.
Yes, I think today it's taking place, no?
Yeah, so basically, they're preparing the ground for this, and you also seen similar words by Lagarde, Christine Lagarde.
Yeah. We come into this, we come into regulations.
Exactly, so we believe our belief is what will happen, that obviously Tether and USDC will not disappear, they will be always there, but the governments and after them the banks, and you know, the majority of people prefer to be able to put their tether into their bank eventually, you know, to buy something or, you know, to spend. I mean, there's a good saying in Hebrew: we cannot go, you know, with Bitcoin to super, you know, only with tether to super. So what we see. So we basically believe that this agenda will only increase because governments want the control, as everybody knows. They want to make sure the money is being used to pay taxes, you know, it's being used to, you know, to not to pay, you know, any nefarious or risk activities, whether it's real or imaginative. Everybody can, you know, leave his own opinion, whether it's a control of the big brother or, you know, just a proper legislation, surveillance, yeah. But, you know, this is the world we live in. I mean, our government will not allow us to do what we want, unfortunately. You know, I'm saying this from a guy who's been in crypto since 2011.
Indeed.
Yeah, it took.
You're one of the OGs.
Yeah, I mean, it took us also some time to understand this, that if you want to tap into mass market and get out of our small pond, you know, because again, how many people live in crypto today? Besides, you know, all the TikTokers and everybody who are just, you know, jumping in and out. I mean, I would say like maybe a couple of millions at most, like true people who are about this. But if you want to tap into billions of people, you need to play according to rules, at least as much as you can to play according to rules. And that's what I think Diem also understood what they're building those games.
Thank you. May I take your microphone?
So I hear two things in what Stas said. One of the things is regulation, and we're coming back to it. But another thing I hear is the arrival of the tech giants into stablecoins arena. So what does it mean to you guys, to Theis and to Maker? What does it mean when big tech is stepping in? Because if Facebook is stepping in, that means Google can step in, that means Amazon can step in, that means Apple can step in.
So like Kakao yesterday just stepped in.
Kakao is stepping in, so yeah.
It's Lighten, if you've seen also.
Lighten, yeah, Lighten
stablecoin.
is the Kakao's project,
Yeah, for
right?
Korea.
Yes,
So
and
we
there's
just announced that later.
that we have someone involved in stable node, right? So I'm passing over the mic.
To me or
Start please, yeah.
Yeah, I'm formed like by Hayek and Ostrom, like the free thinkers of monetary policies and also economics. We think competition is good, and also saw the statement from Yellen yesterday. So if we don't hurt the confidence in national currencies or fiat currencies, we can exist. And I think it's very, very bad in general. I think we are forgetting why we started this space at all. The endeavor and journey was to actually create something that could compete with the current system, to eradicate inflation, to give money power back to the people. And I think, it's a shame, I think. And I think, of course, I can understand why this is happening, because the crypto space is actually maturing now. So it's also starting to become a real threat. And I think we should be allowed to exist on all terms so we can actually compete with the current systems. I don't say we are better than the others. Could we just be allowed to compete so we can see if we could find better properties of money? Because if we're not allowed to do this, it's going to be very hard, or we're going to have some kind of hard struggle or revolution or something in the end. When the fiat falls to the ground, it will happen eventually. So yeah, that's just my take on it. So I don't know, what do you think?
Gustav, can you give us a little bit on the big tech?
Yeah, I mean, so basically, like, we will see the same with CBDCs, right? Like, they will come in and they will compete on very different terms than we are. They won't be able to do the same kind of innovations that we're doing. So I mean, I would more see it as like an onboarding opportunity for us, right? To get people who will be like familiar, like more comfortable with digital currencies. You know, I think like if we see someone like, you know, Apple, Google, someone launch a stablecoin, I mean, yeah, it will be a stablecoin that they will use to optimize their processes, but I don't think that they will be able to capture kind of like a lot of the value that they create in DeFi. I would also say, you know, like, well, one of the most important things about the decentralization, if you don't get this like jurisdictional exposure, right? So, you know, for a lot of people in the Western world, you know, yeah, you know, we're completely fine with, you know, like our kind of like financial properties being tied to the US, being tied to a European country or the European Central Bank, and, you know, we abide by those, you know, local regimes, and, you know, we're fine with that. But if you take the rest of the world, which is the majority of the world, they don't necessarily want to have this jurisdictional exposure to these countries that basically can, you know, determine like what is happening, you know, in their daily lives, right? And at the same time, you know, I used to live in Argentina myself. There was hard into crypto, horrible inflation, had to find an alternative. And if we look at countries like that, their local jurisdictional systems doesn't serve them either.
So basically, like what kind of like my emphasis, what I want to be promoting is to get this global, completely unbiased alternative to the traditional financial system that you can access anywhere in the world if your local systems and local environments don't serve you as you should. Today, like depending on where you're from, who you are, you get wildly different access to financial services and financial products. And this is like what we are building, right? We are building the access that you can come in from anywhere in the world and you can get on the same terms, you get the same deals. What big tech is doing, they're not doing this at all, right? Like their mission is to optimize their own internal processes, and that might be good, if you live in the US or something, but I don't think this is something that we're going to compete directly with, kind of like the ethos of what we are building. We see a lot of growth in emerging markets, and I think this will continue to grow over time.
Right, because basically, I think that the narrative is they're delivering to unbanked, if I'm not mistaken. That was Zuckerberg said. Initially, he was saying that he's going to cater to unbanked.
Yeah, but they changed the narrative.
They changed the narrative. Okay. Because basically, everybody has WhatsApp and Facebook and everything.
Yeah, they basically think that it's much more profitable to becoming, their tactic is very interesting. They're basically coming saying, okay, listen, use government like the DFL, we build this platform which is ready for you to launch your digital law. No need to commit to anything, to launch, and you can leave anytime. But it's like the saying, old saying goes, once you in, you never out. Obviously, nobody going to move out of platform with 3.2 billion users, away and start onboarding everybody from the start. So they kind of build, I would say, maybe a honey trap of sorts, and they probably think it's much more lucrative than selling a banking solution to some guy in Ghana, which earns like $2 per day, so or whatever. So basically, this this like the new narrative is.
I think we also need to look at like the logistic overhead of providing services to the unbanked, right? I mean, if these guys are going to do it, they're going to need departments in every single country. They're going to have to hold hands of every single person who uses this platform. It will cost them a lot of money. The revenues won't be
well, the money they don't like.
No, but I don't think they will earn that much from providing services to people. So we did a lot of work in Argentina, right, at Mega, right, and back when gas was cheap, like our average transaction on like the biggest platform we had, where we had over 60,000 weekly users in the beginning, and they were transacting $10 to $15 per transaction. Like that doesn't earn you a lot of money, right? But if you do it on public infrastructure like a blockchain, you don't need to actually manage each individual, and also like the applications. I mean, of course, like some teams, like at Maker or the most, we're like up towards 100 people. But if you look at like how much value we're actually settling, like it's a very small team. You look at teams like Uniswap, right, who could basically be providing trading services to like I don't know how many people the blockchain can scale up to, but like a lot of people in their team of like 13, 15 people or something, right? Where like if you look at how big the stock exchange teams are, right? It's like thousands of people. So also just like the logistical and manual overhead of running these centralized platforms is much bigger. And just because you say like I put a stable coin on WhatsApp doesn't mean that they can kind of like escape this. They will still need to have this. So I think there'll be like a huge group of people that we will just be much better, much more suitable at actually servicing. Because we have aligned incentives in the network, right, where you have all of these different market participants who actually benefit from participating without necessarily needing to coordinate via a company. So I don't think that they will be compared. Like I think there's many places where they wouldn't be competitive. I think there's some places where they would be very competitive. But we can see the same in traditional finance, right? Like right now, maybe we're venturing into real world assets. We're not targeting real estate in Europe, where you can borrow at like 50 basis points, and there's still a default risk, right? I mean, it doesn't make sense at all, right? Because some places the traditional system is just very effective, but there are some markets, there are some industries, some verticals where they're very competitive, and I think we shouldn't dismiss all of that just because it's called big tech.
Yeah, I guess the model again, it's not something which it was no public announcement. It would be like just to take a cut, proportion of this, rights. And then basically you speak about, trillions of dollars coming for you just from creation of new money on DM, and that's the goal. So as I said, it's much more lucrative than having compliance departments and everything just to process, some farmers money in the old countries. I'm personally disappointed because I think it will be a great opportunity for Facebook and DM, to tap into those markets, and they kind of went on more, I would say, maybe easier path by switching back into the CBDC model. But again, I mean, they're a for-profit company, and then they need to grow, especially that now there's a lot of talk, like breaking them down, limiting their tracking activities. I mean, Apple, with their recent, privacy controls has impacted a lot of their bottom line, and I mean, they will do whatever they needed in order to get it back.
Sure. Just 1 second. So, how are we doing time-wise? Can I wrap it up?
Yeah, 2 more minutes. Fine.
Okay. So, I would like the last one to have around, basically have everyone share with us how do you see the future. So, you can bring up regulation, KYC, interoperability, or anything else you do. So, Theis, you want to start? You have 2 mics, you can choose.
Yeah, that's fine. Okay, it's a good question. If big tech is entering and also like DM is going to be get first tier money from the central bank, that means we will have a fully restricted system, and I think that's very bad for competition in general. I hope we see many good projects, and in projects like Tagion or Maker, a lot of them. I hope we will find some very good and efficient governance models, because it's still in the making, it's in the testing, it's not perfect, but we are trying to find some models that actually work decentralized. It's not easy. So I hope we'll see more on that, because that will allow the different decentralized platforms to scale and work efficiently. Yeah.
Thank you. So, Gustav, you have the mic, and then Stas is next.
Yeah, I mean, not in the traditional sense of a bank, but I think something like Maker could end up becoming the largest bank in the world. That's like what I truly believe. I really think that we will continue to compete, and I think especially I think also we need to like sometimes take a step back and look at like the growth rates we've had in the last couple of years. If you compare that to other like hyper growth industries like fintech, or that's not a hyper growth industry with peer-to-peer lending, but we've seen like some use cases just fit so nicely into this. So we've had like amazing growth, and of course some of it is fueled by the volatility in the crypto markets. But I really believe that we will hit these strides of exponential growth again, and that could really pave us towards becoming like some of the biggest financial institutions in the world.
Thank you. So Stas?
Well, I could think they will be open. I mean, they had this recent event, this presentation, like about a month ago, when they announced this whole move into CBDC and going back to the US from Swiss. And actually, one of the key points in this presentation was they're now much more open for collaboration. I guess they kind of understood that you cannot build a one-man show like Facebook anymore. You need an ecosystem, and they are very keen. They are looking into the NFT and DeFi. I mean, a very good example which I've been hearing lately, that for example, they're aiming to enable influencers on Instagram to easily create and auction off and trade the NFTs. I mean, like imagine like Kardashian. I mean, I like this example because it's very specific for Kardashian, shooting up a photo, signing it with a finger and clicking it and sending this to here the pool in bikini, sending this off for actions and for trade. So they are very open for this. They understand that it will be one of the drivers. I mean, if you guys remember, that's actually what happened back with Facebook back in 2000. I think what was 13 when they launched the Facebook platform, when they basically started attracting companies like Zynga, like Farmville games, which basically boosted up the user count and everything. So I guess they're trying to repeat something the same here. So again, as I mentioned at the start, there will be always space for two: the unregulated and the regulated world. I mean, there will be, and as here. Sorry, didn't happen up, so the Theis correctly said, it probably will make that a lot of people, after they'll get exposed to regulated side of things in DM, will go into unregulated. That's actually we in Pontem count as well, because we going to provide both types of experience, and then fully unregulated one, permissionless, and the permission and bridge into DM. So I believe it will be actually beneficial for the for the field, because it will bring those people who kind of still our mothers, our grandmothers, and whoever who kind of been still looking at the crypto as one big, speculation. Maybe having some real apps which they can easily tap into them, from their phones, from their computers. Yes, it will be not permissionless, but it will give them the first steps. And who knows? Maybe then it will be open to experiment more, and hopefully the user experience and decentralized permissions will also, rise up. We will finally solve the problem how you allow people, to protect their private key and not lose all your savings if it's gone. Which I think is a major problem, and unfortunately still not solved after all this time. So find the balance between privacy and be your own bank, and still be able to recover it if something goes wrong. And then we'll see influx of people, because even if 1% of those 3 billion people will go into DM, and from it maybe 1%, 10% will go into unregulated, and it will be a huge influx of people.
this again my thoughts. Obviously, things can go a little bit.
Thank you very much, guys.